Volatile times and rising energy stocks. Gary Glover is walking us through the opportunities and trades in the market. How are you, Gary?
Yeah, I'm excellent. How you going?
Well, we've got the market rolling over. There's been a bit of volatility. It's pulled back. It's had a bit of a rally. And you've highlighted on the charts a fair few things to look at here. If we start off with the NASDAQ, you've got mini bearish break. And what does that mean to us on the charts and what next?
Yeah, so as we were saying last week, the NASDAQ was the only sort of index there that really hadn't sort of broken sort of key support. So like all the other indices have all sort of broken down here. So the NASDAQ there. So we sort of talk about maybe that second line there is sort of maybe we have sort of broken, but we're probably starting to slow here. But a break of that sort of second line there would probably be the death knell for it. But it did break below it intra week there last week, but it did manage to recover by the end of the week. So it's sort of unusual to sort of break it and then come back above it. So look, it's, I guess it leaves it in a bit of precarious sort of position here. So I think this will be a pretty critical week for the NASDAQ. So if it can sort of hang, if it can bounce here and stay firm, then maybe it can sort of trawl slightly higher along that sort of support line. But I think if it breaks below that line here and closes below that line this week, then I think it's likely to follow all the other indices lower. So yes, so I think it's an important week. Hasn't sort of cracked yet, but I think the fact that all the other indices have broken lower is a bit of a negative sign. So I know once you break through key level, you can sort of bounce there and then kind of track it, and then so it's not unusual to break below the key level, then bounce and sort of bounce back to retest it and then come off. So we could have that scenario here, but yeah, I just think this will be a pretty important week for the NASDAQ here, sort of just because all the other indices have all broken down. And the other thing, which is we've talked about distribution days in the past, Chris, as well, is that we've definitely seen quite a few. We've probably seen sort of at least 4 or 5 distribution days across all the indices. So what that is if we get a sort of down day with greater than 0.2% and the volume is greater than the previous day, that's referred to a distribution day. So it's not unusual to get 1 or 2, but when you get a cluster, if you can get say 4 or 5 over 2 weeks, then you're getting a cluster of sort of heavier down days on heavier selling. That's usually pretty negative. So you generally see a cluster of 4 or 5 distribution days before a larger decline occurs. So that's why we definitely going to be on our toes here right now, because we're breaking key support across a lot of indices. We've got distribution days, heavy volume. Even on the ALWI Index, we highlighted there probably 2 or 3 weeks ago that we're starting to see some heavier selling coming in on our market, which is sign of distribution. So definitely got to be cautious here. But at this stage, the NASDAQ is still hanging on, but I think this week will be kind of critical.
So we're also seeing distribution days on the Aussie, and that's coming down. We did drop, you can see on your chart here that they dropped significantly and then rallied off what you've got as a bit of a support line there.
Yeah, that's right.
We're seeing this sort of being a shorter term rally, or maybe just this sort of the start of that bear situation where we end up with large swings in short amounts of time.
Yeah, so look, we got a bearish break there, and we got distribution, we got volume there as well. So it's sort of some selling volume there. So that's definitely bearish there. But you'll oftentimes how you sort of trade into a high, you might trade out of that high this sort of similar way. So you'll sort of find it might, we've seen here that 7,200 there, that was kind of support zone on the way up, and then it broke up. So on the way down here might be sort of might be sort of support on the way down as well. So I actually think you might sort of see our index. So it's not surprised me to sort of come down at 7,200. If you look at the left side there, it's around 7,400. I think we'll probably bounce up to 7,400, but we'll probably find resistance there. And it might even stay there for a few weeks here before we break down. But yeah, we've definitely come back to the first support there, but I still think this comes back larger here. I think we're at least going to see a quarter range decline there, which is sort of back to that 2007 high. So that's like 68.50 there. So I think that's going to be the minimum move that we'll see here, I think.
That's the Aussie looking at that, and as you noted, the volume has been increasing along with that volatility and downward swings. If we cast our eyes over to the energy side of things, you're looking at another part of the market, and you've said key support meets key resistance. And we're driving in on this chart. You've got some green lines and some red lines. Do you mind just explaining what those lines are, and then how it relates to key support and resistance?
Yeah, so I was looking at the sort of the red lines there, and then the overhead line. I thought, gee, well, we're sort of hitting key resistance there. But the thing that caught my eye was the volume. So they've seen a strong volume the last couple of weeks. So it's like, oh, okay, that's not sort of if this is just a little counter move, then the volume should be sort of lightening off. So you wouldn't sort of see that sort of volume there. So just notice if we looked at the body there, you'll see that we actually sort of found support there. So yeah, but look, either way, if we're to break above that overhead trend line and that old line as well, then I think that'd be pretty positive. I think we'll probably see this go to a new high there. So I think we've seen oil stocks already this week been pretty firm here. So pretty bullish there. So yes, I think you'll see a bit of a further move in that. That's probably all along the lines of the recovery play, as well. So we've seen sort of, as we mentioned, a lot of those sort of travel stocks bounce pretty hard. So yes, this is probably sort of fits into the sort of similar criteria. But yeah, I think you'll see a bit of a move here. But I think maybe once you go to maybe 9.5 on the index, you might be looking to write a few calls here or take some off the table there. But it does look sort of positive here.
Well, that's the energy aspect. If we drill down on individual shares, you've highlighted this week that you've got AGL, the weekly chart, and you've noted massive volume being capitulation low. Now, it's pretty clear. Yeah. This is a big downward trend. And then right down here, you've highlighted this huge volume. So was there some corporate action or something that happened, or it's just what you're saying, capitulation?
Yes. So I think it was like 72 million shares traded 2 weeks ago. And then last week we had 62.6 million shares, so 134 million shares, and there's only 623 million shares on issue. So that's around 20, that's over 22.5%. So literally sort of, almost a quarter of the shares here, I guess if we look at the last couple of days here, you'd say a quarter of the shares have traded hands here in the last 2.5 weeks. So that's a big sort of big shift. So it's kind of like, if you're trading down, at some stage there, everyone gives up. Do you know what I mean? All the shareholders have been hanging in, and they finally just give up. And then if you're trading that many shares, I mean, that's it's like a whole new set of new hands will come in. So when you have that many shares traded there, it's just sort of, it's generally a sign of capitulation there, people giving in, and then finally some buyers stepping in as well. And we've sort of seen that bit of a bounce there last week as well. So seeing that sort of big volume, sort of capitulation style, and then a sort of semi-recovery here. So what you want to see here now is maybe a little bit of a pullback, volume lighten up, so start to see the selling dry up. So, but yeah, just really that's sort of, you don't sort of see that type of volume, sort of go through where you see that, that percentage of the register. So, particularly in a large cap too, that's massive. That's a massive sort of shift and change in hands. So historically, when you see that type of percentage shift in their register, that's it often is a sort of capitulation sort of style sort of shift. So yeah, I think this is one that keep an eye on here now. I think it's totally unloved. No one, still see no one actually sort of
recommending it.
We're recommending the stock. No. So obviously some issues there, but yeah, but I think most of the broker values are a lot higher, but obviously no one's jumping. No one's committing to the positive side here, just because I guess politically this sector's under the pump there. But yeah, there's a few things there in the headlines there the last couple of weeks around sort of coal prices and coal assets there, and trying to slow down the progression of going green too quickly. But but it's that for me the one thing that jumps out there is just the volume. That's just a massive. I just know historically when I see that sort of volume go through the markets and that sort of style, it's just it signals a shift in hands there, which can sort of signal a shift in behaviour.
Possibly going from the weak hands that sold it down into strong hands that can withstand a bit of earnings variation. And
that's right. Yeah.
See the ship right itself.
Yeah, I mean, it's kind of like that sort of volume there. It's kind of like it's like an institution's finally stepped in here and and got a parcel, got active here. So yeah. So I mean, there's quite a few of these infrastructure type assets have been bid for here. A lot of people don't think that this is a quality asset there. So maybe less likely there, but yeah, it's definitely been that volume is just sort of it's just a shift in behaviour for me. So it's one that I'm watching really closely here.
Well, another one that you've highlighted that has come down significantly, you've got NUF in the chart. So we've got Nufarm, we'll just zoom out so we can see that. You've said once again, got key support, key resistance on the energy side, but for looking at Nufarm, it's a bullish break on strong volume. So again, that critical point of volume, this has kind of been bouncing along the bottom here, sort of tightening and then coming into that downward wedge. So what's the key aspect, or is it a few things that are sort of catching your eye for a possible turning point?
Yeah, no, exactly, Chris. Yeah, a few things there. So we have sort of false break in end of last year, and then the market had a nice recovery, kind of might say a sort of an impulsive rally, but not, I guess a medium type rally there. Would sort of rally $2 there, and then since then it's pulled back here, but the volume sort of dried up. It's overlapped in nature, and sort of price ranges sort of tightened up here, and then all of a sudden the last few weeks we've seen a bit of a bounce here on some stronger volume. So last 3 weeks there, that probably sort of spring low there. I guess you might call it a mini false break on the low side there. That sort of met with volume there. We've had a bit of volume the last couple of weeks, so looks kind of positive to me. So I think sort of one stock that looks positive here. So it didn't have a massive move previously, but yeah, we could definitely have a modest move there. And that's this is a stock that's probably got a reasonably high delta, so it will move a reasonable amount. So yeah, I think it does look sort of favourable to me.
That's NUF, and then you've also got another one trawling at a bit of a bottom, Avita Medical. You've got a red line here, so that's a bit of support that's standing up, and then these red boxes, they're coinciding with some volume spikes, are they? Is that what's standing out to you?
Yeah, exactly. So I'm always sort of curious to sort of see volume. So like, we've seen markets go to a new low and then not hold them, false break, and then we see a bounce from strong volume and then pull back light volume. So we've got a bit of a false break there. We've got some sort of key support line there. Just seems sort of volume come into the market around those levels. So this looks like accumulation type there. So look, maybe slightly riskier products here, but I know these guys are sort of in that regenerative medicine and also sort of got a range of respiratory sort of products as well, which is probably going to be pretty important, I guess, at the moment. So yeah, it does look pretty interesting to me. So just the big volumes are sort of supportive there. So yeah, I'd love to see a bit more contraction in here. But yeah, some interesting signs there. There seems to be sort of finding support at that sort of just above that sort of 450 zone there. So yeah, so it looks kind of promising to me.
Right, so promising signs there. On a promising industry or sector that has received a lot of interest, a lot of fanfare, and possible more mergers and acquisition talk after what we've seen, you've highlighted ZIP Z1P. So and some interesting parts on the chart with some highlights. So do you just want to give us a bit of background on the sector, what that's looking like, and then explain these red parts on the chart?
Yeah, so look, everyone knows obviously that Afterpay's been bid for by Square. So there's a bit of talk that I mean, even last night they were saying that PayPal was looking at Afterpay. So there's definitely a bit of talk, and typically when the industry sort of like this sort of consolidates, if one gets bid for, then rather than trying to create itself, and you might end up sort of buying someone else within the model here. So I think Zip is probably one of those sort of contenders there. There's probably a couple others as well, but so yeah, there's definite reasons to be optimistic about the sector there, even though I sort of think it's overvalued. But I guess at the end of the day, if something else in the tech which is overvalued bids for something else which is overvalued, it's it's overvalued, bidding for overvalued, so it probably doesn't matter too much. But the price action is probably the most interesting thing here, is that each pullback has got sort of got narrow, so we're getting squeeze are getting sort of shorter and shorter here. So just noticed we were looking at this last week, but it didn't break above our trigger point. Actually sort of broke down, but we broke down and recovered again. So we actually saw some decent volume come in on that washout there. So I just think it's a bit of a contender here. It's sort of one to watch here. I definitely think if it can break above sort of the last 2 or 3 weeks sort of high, that'll be a positive sign. But then breaking above the previous little swing high, which is around that sort of 817 level, that's probably, if it can break above 817, that's a really strong sign there if it can go above that, because that's sort of, if we look at our previous triggers there, that's when the stock sort of got rocking and rolling previously. So it just looks interesting. I mean, it looks, from a corporate point of view, just history shows you, once in this financial services area, everyone just seems to sort of follow each other. It's not a lot of independent thinking going on there. So if someone bids for sort of something else, maybe we should get involved in that. So it's I just think this is definitely one to keep an eye on. So it's and the price action is pretty interesting as well. So I just but I guess with everything else, some risk here. So gonna use a stop and stuff in here, but it does look like a contender to me.
Yeah, well, it's definitely a hot industry at the moment. Now, we've had a fair few questions over the last couple of weeks about how to get in contact with you, get across these reports, and sort of making calls on stocks, whether they're buys or sells, all that kind of thing. So what's the best way for people to get in contact with you and keep across your trades and recommendations and the like?
Yeah, they can email me, or they can ring me as well. I'm pretty much in front of screens sort of most of the day. So
very good. Well, we've got the contact details of the phone number and the email address on screen. Are they the best ones to use?
Yeah, exactly. Yeah.
Perfect. Well, thank you again for the insights, Gary Glover from Novus Capital.
Thanks, Chris.